everyone. So we have GU here, and in this particular example we're going to be showing something pro trend and how it's a little different than a counter trend move. Now if we just look at the daily really quick, we can tell that we are bearish on the daily. We're making new lows. The other thing we can note right now is that aside from being bearish is that we have equal lows. The other thing we can note here too is with being bearish here is this low failed to run this high, which makes this low weak. So now you have a weak low, you have equal lows, and we are bearish on the daily time frame. So we could start making the assumption that the expectational order flow should continue on down, and that these equal lows are more or less stacked liquidity for the taking. So if we go down to our analysis time frame here, what we have is a couple of things actually. So we have a flip zone here. So you had a 4-hour demand. This was the last demand that was responsible for putting in a high, more or less. You could say that this whole area in here was liquidity. Now what I want you to make note of is that we have a reaction point in here. We also have a supply zone in here. To me, this would be the candle that took out the reaction point. So you can see how powerful these flip zones are. You also have inducement in here, liquidity for the taking even. And what we can say here is that we expect these lows to go. Now this initial reaction here, it doesn't necessarily have to hold. So what we're actually looking for is something on the smaller time frame that tells us that this bearish momentum is likely to continue. So we'll go down to the 15 time frame. You know what, let's just pull this back a bit. We know we're inside a 4-hour supply. I'm just going to pull this back a bit so it's a little bit cleaner. And ultimately what we have is an area where we're kind of consolidating. We're also building trendline liquidity. And that's another confluence that maybe we're looking to run this area. Now ultimately we could say we're still tapping into this 4-hour zone, but we're waiting for something to show us that there is willingness to go down, along with our idea that these lows should be run. So as always, we're looking for change of character. So you got a change of character complete here. So you take the highs, which would be your chalk top. Now the lows would be down here on this wick, and sometimes it's a bit of a distance to complete a chalk, which is totally fine. Now remember what I was saying earlier about GU, it's a pair that likes the extremes. So you could kind of start looking at this, and with this particular pair I always find it wants to come to the extremes more often than not, and that's just a characteristic of most pound pairs for whatever reason. Now if we just play this forward, look how price is acting and what it's ultimately doing. And what you could say now is you are building a bunch of liquidity. There's liquidity in here. You also have additional liquidity sitting in here. And ultimately, what you're going to have is a bit of a range supply zone here. Now, if you get a supply that's kind of dirty looking like this too, you can again scroll through your time frame, see if something cleans it up a bit. I don't care for the 30 to me 20 doesn't look too bad. Even the 15 range isn't horrible. Like the bottom of these bodies to the top of the wick, that's how I would pull this supply. And this is again something you'll get familiar with as you play with it. Now ultimately what we're looking for is the same thing inside the supply zone on the smaller time frame. Now I execute on the 1, but if you're unsure of executing on the 1, you can always take the whole 15 order block. You can find a 5-minute order block within this area to execute off of. Myself, I like to see multiple changes of characters, so 1 on the 15, 1 on the 1 minute, and that for me is a pretty sure way of doing it. There is nothing wrong with taking the whole 15 order block and taking this trade. It may seem a little extreme, but with a pair like GU, you can do quite well just trading the 15. And for a lot of people that do have a job and can't be at the charts and watch the 1 minute for these chalks, it's definitely okay to set an order on here. And once again, we swept the highs, we swept the lows. So if you just quickly look at this, you have chalk top and you have chalk bottom. Now with GU, again, it likes the extremes. You will miss the odd trade not taking the extreme, which is totally fine. But more often than not, I found this pair likes the extremes. So you don't actually even really get any sort of a reaction. So, because this actually doesn't tap into it. If you weren't sure and it could be this zone or that zone, what I do in a case like this is it's close enough together. This is a very aggressive pair. Even if it ends up being a 3 or 4 pip stop, that's still not bad on this pair. So ultimately what I would be looking for is something like that. You could probably even dial that in a bit smaller, 2.6, 2.5, whatever. You could even give it a little more room for spread. That's totally up to you. But ultimately all you're looking for is a tap. And there you get a tap. It's probably not a bad idea to even, either go take it on the half or take it on the 25 and give it more room to breathe. Because this pair does have a little higher spread than Euro USD, so it's okay to give it, 0.3, 0.4 above. It's not that bad with this pair. Now, for a near target, I would honestly have zero issues holding this right to the end, but we also want to be smart and have some kind of guaranteed plan to pay ourselves. To me, like a lot of people want to pay themselves here, and that's totally fine. To me, this is with higher time frame trend. I wouldn't even think about paying myself till here. These are the nearest equal lows. These lows fail to take this high. They're weak. To me, these are good as gone. Like I said, I would have no problems holding this right to the end, but it's also smart to pay yourself as nothing in the market's guaranteed. So if you wanted to, pay yourself 20, 30% here at this area, even 30 or 40, that's totally fine. But when you're with higher time frame order flow, it's totally fine to hold this a little bit longer. So these would be kind of our, say we paid ourselves here, this would be about 19R. So even if you paid yourself 30%, 40%, whatever, and left the rest running, like you'd still be doing pretty good. With this particular pair, I don't leave my stops open ever. I just break even where I move my stops right to entry. And I usually have a TP1 and a TP2, depending if it's counter trend or pro trend. I'll either hold it longer or take profits sooner. In this particular case, I'd have zero issues pretty much holding this to run these 4-hour lows that we were talking about earlier, as these are weak to me. They're equal. Daily's bearish, but we also have to be smart, and it probably wouldn't hurt to pay ourselves something there. But if you understand order flow and where a higher time frame is going, you should have zero issues with just holding this. I'm not big on trailing if the price action is clean or with we're pro trend, counter trend, or if it's in a range or price action is messy. You may want to consider trailing. So let's actually go to the 15. So we've obviously hit this TP. We smashed right through it. As you can see here, we are with higher time frame order flow, and the likely thing to happen is wipe all these lows. So in this particular case, we would be looking to run all of these lows. So myself, I would be holding this into here, or at least partials. It's obviously always good to pay yourself. You know, even if you partialed out, say 20-30% in here, and then you left the bulk of your volume for the 4-hour target, even if this hit was 60-70% volume, you're still getting above 30R, and you've already paid yourself. And anytime it's pro trend, it's usually a pretty safe bet. Now, something else too, if you wanted to, you don't have to close the trade out in full. You could close 80 or 90% here and leave another little runner on as it's pro trend. Or you could also just be realistic and be like, well, this trade just went 48R. I really have no problems closing it in full and setting up another trade. So that's kind of how I manage when it comes to pro trend. We're a lot more relaxed on pro higher time frame trend. You really don't need to be too worried. As long as your risk's off the table and you're broke even, worst case scenario, this comes back and hits you at break even and you eat some commissions, which is totally fine. As long as you're protecting the bulk of your account, that's all we're really concerned about. I would highly recommend though just starting with one pair, maybe two at the most if you're very analytical and capable to handle it. But for the most part, I tell people to just trade one pair. I traded Euro USD for about 6 or 8 months before I even brought a second pair in. So that's kind of my recommendation for everyone starting out. Pick a US major and just go with it. So we'll cut this video here, and I hope everyone enjoyed this course. There's also going to be a frequently asked questions section that I'm going to leave open in the course, and what I'm going to do is as people ask questions more and more, I'll make videos and answer them and post them in that section. So I hope everyone enjoyed it, and I'll see you guys later.